Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera. My name is Izadiana binti Amran and my matrix number is 16082-3F 1078. And today I would like to explain about the nature of expenses and how these expenses related to the accounting standards. Okay, first let's look at the definition of expenses. So according to MFRS 101, expenses are decreased in economic benefits during the accounting period. This can happen through outflows of cash or incurrence of liabilities, which result in decrease in equity other than distribution to the owners. In simple words, expenses are the cost a business must bear to operate, and this cost decrease the company's profit. Next, some of example of expenses under operating expenses is salaries and wages, utilities like electricity, water, internet, rent, depreciation, repairs and maintenance, and office suppliers. And now let's move to the accounting standard that related to the expenses. There are 3 accounting standards that related to the expenses, which is the first one is MFRS 101, presentation of financial statements. This standard requires expenses to be classified by nature or by function in the statement of profit or loss. The second one is MFRS 138, which is intangible asset. These standards explain when costs related to intangible asset like research and development or software should be recognized as an expenses versus being capitalized as an asset. And the last one is IAS2 or MFRS 102, which is inventories. This standard states that inventory costs are treated as an expense known as a cost of goods sold when the goods are sold. Okay, so in conclusion, expenses are the key part of financial reporting because they show how resources are consumed in generating income, and accounting standard guide us how to properly recognize and classify these expenses. That's all from me. Thank you.
Hi, Assalamualaikum. My name is Muhammad Danish Hafizi bin Hafiz. My number matric is 06080 23F 1063. So today we're gonna talk about elements of expenses, audit extension and audit extension and accounting treatment. So firstly we're gonna talk about element of expenses. So my first point is material cost. Material cost divided into 2 types, which is direct material cost, which is these are materials that can be directly identified with and allocated to cost units. For example, wood used to make furniture. The second one is indirect material cost. These are materials that cannot be traced directly to specific products but are necessary for production, like glues or screws. For number 2, for my second point is labor cost or wages, which is this includes direct labor costs, which are referred to wages paid to workers who are directly involved in production. Their effort can be traced to specific units or cost centers. So number 3 is expenses. Expenses divided into 2 points, which is direct expenses and indirect expenses. Direct expenses is cost directly related to a specific job or product, such as special tools or royalties. For indirect expenses is costs that cannot be linked to a specific product, like rent, factory insurance, or maintenance. For number 4 is components of cost. Component of cost divide 2, which is prime cost and factory cost. For prime cost, the total of direct material, direct labor, and direct expenses. Factory cost is prime cost plus factory overheads. indirect costs like supervisor, salaries and depreciation. And lastly, for element of expenses is selling price. The selling price is the total cost or cost of sale plus profit. So we go to the next slide.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faizul bin Muhammad Shah and my number matrix is 06D8023F1105. And on this slide, I will explain the expenses cycle. First, the process begins with a purchase requisition where a department requests a good or service, and then a purchase order is issued by the purchasing department as a formal order to the supplier. And then come the receiving stage where the good or service are received and checked. After that, we move to invoice processing where the invoice is verified and matched with the order and receipt. Once confirmed, the next step is payment, which can be made in cash, check or bank transfer. And lastly, the transaction is complete by recording in account where everything is entered into the accounting system. This cycle ensures proper control, accuracy and accountability in managing expenses. That's all from me, and next I will give to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nuaini binti Muhammad Zalani. My matric number is 06D8023F1002. In this slide, I will explain three main source documents used in auditing expenses. First is the invoice. This is issued by the seller to request payment from the buyer, and it shows details like item, price and total amount. Second is the purchase order or PO. This document is prepared by the buyer to confirm the order made, and it serves as proof of agreement on the purchase. Last is the delivery receipt. This show that the goods or service have been received with details like date, quantity and signature. These documents are used during audit to make sure expenses are recorded correctly and are supported with valid evidence. That's all for me. Thank you.
Hi, so for this slide, we're going to talk about audit sessions and accounting treatments. So my first point for audit session is classification. Classification is expenses are recorded in the correct accounts. For example, admin and selling expenses. For my second point is occurrence. Occurrence is recorded all expenses actually took place. For my third point is completeness. Completeness is all expenses that should have been recorded are included. So for accuracy is expenses are recorded at the correct amounts. So my last point is cut off. Cut off is expenses are recorded in the correct accounting period. So for accounting treatment has four. So my first point is measurements. Measurement is recorded the actual amount paid or payable. So for the recognition is expenses are recognized when accrued, not when paid. So for the presentation is shown in the income statement. For the last point is classification example is operating expenses. For example, like rents. So thank you for hearing my part. So I'm gonna for the next part.
Hi, on this slide, I will present about accounting system and control activities related to expense. And firstly, I will talk about accounting system. Accounting systems that are related to expense refer to an accounting information system focused on managing and organization expense. It covers the process of recording, tracking, controlling, and reporting all spending with the goals of ensuring operational costs are monitor and remain within the allocated budget. And next, I will talk about control activities. Firstly is supporting document such as all expenses must be backed up by receipt, invoice and contract. Next is budgetary controls such as compare expense to budget to detect overspending. And next is regular reconciliation such as bank and ledger reconciliation, detect unrecord or duplicate payments. And next is access control in accounting system. For example, limit who can enter or modify expense transaction. And lastly is authorization and approval. For example, only approval purchase are made to control spending. That's all from me, and next I will give to the next presenter.
Assalamualaikum and hi, my name is Nur Ain Shakira binti Muhammad Asmadi. My number card matrix is 06D8023F1149. Now I want to explain about audit procedure on expenses. The main purpose is to check whether expenses are real, complete and properly recorded. The first one is occurrence. We need to check supplier invoice, contract and delivery document to confirm the expenses really happened. Second, completeness. We should review payment made after year and subsequent payment to make sure no expenses are left out. Third, we have accuracy. We should check invoice calculation and match the total with the ledger. 4. Cut-off. You should review transactions at year-end to ensure they are recorded in the correct accounting period. 5. Classification. Ensure expenses are recorded in the right account according to the company charts of account. 6. Authorization. You should confirm expenses are properly approved by the responsible internal authority. 7. We have reconciliation. You should compare expense records with the bank statement to detect any difference. And last one, we have analytical review. You should compare current year's expenses with the previous year to find unusual chance. In conclusion, audit procedure on expenses help us ensure that company spending is accurate and reliable. This is important to give a true and fair view of the financial statement. Thank you. That's all from us.